we have a very important speaker today. And he's important because he has been, a policymaker, or at least an advisor to policymakers, and he's now heavily involved in policy making, working as a lead economist in African Development Bank. Sorry, I need to find out the George is So as you can see that George has been working in the policy related topics, development, covering a lot of different areas, public policies, finance, financial sector, and etc. So we had some interactions with George, between CGF and George has contributed significantly to our activities. And George is now, as I said, the lead economist at the African Development Bank, and he's also a visiting professor in practice from LSE. So I remember we had your book launch when you were at LSE. So he obtained his PhD from University of Leeds in the UK, of course. And you can see that George's research is more on the policy side, and he published quite a lot of books. I'm not going to repeat the titles of the books, but I heard that George recently published some more books, which I did not see the title. Maybe they are coming. So, George, thank you so much. I know you're very busy and you have a lot of responsibilities nowadays. And thanks for contributing to this seminar session. And I'm sure the topic is very, very interesting to our audience. And you agreed that if we have some questions, we can be interactive. As a policymaker, you like interactions, I'm sure. So the floor is yours, George. You can start your presentation, and then let's see how we can discuss.
Okay.
Thank you.
So you can hear me, right?
Yeah, I can hear you.
Thanks. Okay, thanks, Prof. And so I thought, when I was asked by Meng, and I thought what would be something that would be interesting to talk with you guys, who you do finance as a daily bread, right? So, and for us, I think here at the bank and on the continent generally, there's a lot of efforts to do two things. One is to scale up financing for many of our projects. And secondly, to find ways to mobilize resources that are not necessarily expensive. And so there's a lot of effort at innovations and trying different instruments as a mechanism for raising finance. And many of you might be aware of the conversation that has been happening around the reform of the global financial architecture and so on. So issues of reserves-backed loans have been one of the elements of the conversations. It can be a useful instrument. So I thought of that as something that we can all talk about and get ideas from you guys as well, because as theorists and academics, you may have some insights that you can share with us, and maybe we can translate some of those ideas into practice. So I'll go quickly through the slides, and as Prof said, we can stop at any point and talk, so to speak. So my presentation is organized around 4 sections. Initially, I thought of Africa specifically, but many of the thing I'm going to say probably applies to many poor developing countries. So that's the first part. I will make reference, large chunk on Africa, of course, and then some conversation around what is it that when we are talking about resource-backed loans, there are some positive and cons, and then what do we really need in terms of practical policy and strategy to optimize this instrument as a source of mobilizing development finance, so to speak. So I can start by saying that the development environment in poor countries and in Africa.
Hi, George.
Hello.
Can I ask you? Yeah, George, can you hear me? Can you make your presentation, the slides, larger? If you use the presentation mode.
Yeah, I can do that.
I actually got a message. Meng actually reminded me that the slides are not on the presentation mode. Do you know how to do it?
Yeah. So let me do that. I just have to click this. Hold on. Okay, here we go. Is it showing now? Is that okay?
Oh, I think that's the much bigger one. Yeah, thank you for that.
Okay.
But you can move. Yeah.
You can see. So I was saying that we are in an environment where things are unstable overall, but with some variations. So of course, some countries are doing better than others. And so if you're taking African economies, for example, over the last 20 years, Africa has been growing at least a minimum about 5%. And you can see several reports to validate that. But that growth has been moderated by a number of headwinds, including, commodity price issues, exchange rate volatility, political and governance risk, difficulties in extracting the demographic dividends. Meng, you are in Nairobi. You just arrived, I think, in Nairobi last December, on the heels of kids going onto the streets and protests and all of that. We have issues around debt, which is re-emerging. And so what I'm saying is that the environment is let's say fluid, so to speak. And within that context, also you have geopolitics going on. Countries like the United States, including the UK, by the way, development assistance have been cut significantly, and so forth. And as a result, development finance has become a major policy and a very important factor for developing countries. And we need to think very creatively, routinely, to how do we optimize and leverage whatever resources we have to get the kind of funding or financing that is required. And often, poor countries, including Africans, we also face the investor perception risk. And in Africa in particular, I think that the risk perception is, in many circles, perceived as being unfairly high. And so because of that, there's been a lot of effort to explore alternative financing models and to circumvent the prevalent and at times unjustified risk perceptions. And in particular, natural resource developing countries, and in Africa, there are few, developing financing is being now secured in exchange for or got collateralized by future streams of income from natural resource wealth. And this is what we are referring to as resource-backed loans, this model of financing. So the use of natural resources as a means of repayment or guarantee for loans to a state or state-owned enterprises, the private sector, and international financial institution, however, is not actually new. You can go back in history. I read somewhere that even in the American South, in those days of slavery, slave owners were using people to secure loans from banks. but the guys who are doing economic history can correct me whether that is correct or not. So increasingly, however, resource-backed loans have been used to finance infrastructure projects in large part, but theoretically, investing in quality should generate positive results for society as a whole. So the positive spin-off on the economy should widen the tax base. In other words, resource-backed loans should not become a permanent feature, because if you invest the resources correctly and wisely, you should be able to make the economy grow and therefore be able to generate alternative sources and therefore also step up domestic resource mobilization. All right. Now, the experience I have of working on the continent suggests that there's a tendency for the continent to grow, but sometimes this growth has not really translated into structural transformation, and that makes the continent quite, and probably many of the other developing countries as well, have similar experiences, vulnerable to disruptions, irrespective of whether they're headwinds or even tailwinds. So managing these cycles become quite important. Now, so to sustain positive economic outcomes from the growth that many African countries have experienced, I think they need to obviously revisit the development models. And you might have heard our president, for example, our newly elected president, talking about, how do you reap the demographic dividends? How do you make sure that we don't suffer from climate shocks in a bad way? How do we get financial sovereignty? So all of these conversations is an attempt to get the continent and more broadly developing countries on sustainable growth path. And in the context of Africa, that recognition is actually reiterated in the African Union Agenda 2063, and it's a 10-year implementation plan. And that reaffirms member states' commitment to structural transformation. So there is an understanding that we need to deal with issues to make growth not inclusive, but to make sure it's sustainable. And if you look at the numbers, I think most of the growth deceleration in recent times has been a combination of both domestic and external factors, including things like security, climate events, conflict, geopolitics, the trade sanctions that countries are threatening each other with all the time tended to actually impact poorer countries actually more adversely. So quickly, what are we talking about when we are talking about resource-backed loans? What are the characteristics? So these are loans that are provided to governments or state-owned enterprises that are secured by an asset, which always or tend to be natural resources. So the country in question then would be using natural resources either as a direct source of repayment or as an underlying guarantee for the repayment of whatever loan is actually secured. So the key characteristics, the borrowing entities, the borrowers tend to be central government or state-owned enterprises. In the case of state-owned enterprises, these entities operate relatively independently, and that's also where some of the risks come from, because central government may not, or the Ministry of Finance may not control the financial operations of a state-owned enterprise, and therefore the potential for debt if these entities are securing loans without control of a centralized authority actually raises the risk. And then you have the issues around lenders. In terms of lenders, the lenders are mixed from various sources, as I said, including governments or state-owned enterprises. On the continent, majority of the SOEs that are active in lending are Chinese entities. I'm not too sure about the European ones, but the majority have been Chinese ones. Commercial banks, in that matter, multilateral financial institutions, commodity traders also, as well as bilateral creditors. In terms of collateral arrangements, resource-backed loans are backed by collateral in the form of natural resources such as oil, minerals, and other resource commodities. There's a lot of talk these days about rare earth elements, even though we sometimes don't even know, and that's the problem. We don't know how much of it that we have because of the quality of geological surveys and so on. And yet, countries are actually mortgaging these resources without really having a clear idea how much it actually does exist or don't exist. Maturity conditions. The maturity of reserve-backed loans varies. Different loans have different payment periods and terms. And as a result, also this, and that's the reason why some of you might have insights to offer countries or advice to offer countries, because negotiating these payment terms, including the length of maturity periods for these loans, become important, because that has direct influence on issues around debt sustainability. Okay. I already mentioned that these instruments are not new. I read, like I said, I read somewhere you can go back as far back as the 19th century Peru, where money was borrowed against one of deposit as collateral. In Africa, countries like Angola has engaged in these practices as far back as the 1990s. And I also mentioned that a number of Chinese entities have been involved in giving these loans. And more importantly, the most rich countries in Africa, Latin America as well, have been engaged in this. What is particularly critical in this debate is an appreciation of the advantages as well as disadvantages, and how the mechanism can be used strategically as a source of development finance. So I think that you guys in the Center for Global Finance may spend more time rethinking these issues, and maybe will help us with, what would be the most strategic way to use this instrument for financing development, given the fact that ODA and even climate finance is not flowing as much as we want to the African continent in particular. So, some pros and cons. They offer very quick and easy access to funding to resource-rich countries. But in many instances, countries resort to mortgaging their resources after failing to access traditional finance and ODA for whatever reasons, including geopolitics. And as I kind of suggested, one of the main concerns about resource-backed loans is the issue of transparency. The terms of these loans tend to be opaque. There's little public disclosure. There are issues around accountability. Citizens find it difficult to monitor what is being done in their name in that regard, as well as oversight bodies tend to fail to assess the fairness of these loans, and as well as their sustainability. And the risk associated with resource-backed loans include things like commodity price volatility. If prices fall, that means you have to surrender more of the resources as opposed to when prices go up. And so the issue of the terms of payments and the schedule of payments need proper thinking, because if prices were to go up, do you give the same quantity of resources that you would have agreed to, or less? So these are things that need to be worked out, including also issues around exchange rate fluctuations or changes in interest rate. All of these actually influence on the settlement terms for these loans. And so there's always need to make sure that we mitigate risk when they arise. But the difficulty is that we citizens don't know the term of these loans sometimes, as I said, or the negotiations may not work in favor of poor countries. And I will come to that point later on in terms of issues around capacity to structure these loans and make sure that the loans do what they need to do. So here are some of the risk, and on the right-hand side is what I call opportunities. You have, on the risk side, you have issues around weak governance may jeopardize the loan. The loan market the market for this kind of loans may not be competitive. I already mentioned the fact that there's always a tendency for lack of transparency. And large loans may undermine debt sustainability. Because if, let's say, prices fall, you need to put more of this, or if these things are being procured by SOEs where there's no control by a central authority, issues around debt management become complicated as a result. And in that regard, it may actually exacerbate financial distress for countries, as opposed to being actually a good thing for them. Now, in terms of opportunities, most of the resource-backed loans, at least on the continent, have been used for infrastructure development, but they could be used for other purposes as well, including budget support and so forth and so forth. In terms of the terms, it potentially can offer opportunity for cheaper financing, easy access, and in that regard, you can quickly use it for mitigating volatility. But it can also be renegotiated. So that is a positive. But that means also you need to have a team of experienced lawyers, economists, people who can negotiate good terms for the country. So some reflection on policy and strategy. Yeah. As I already mentioned, we can use resource-backed loans strategically, and that implies all parties concerned take constructive approach to generate mutually beneficial outcomes. It might be useful in this sense then to recall the Paris Declaration on aid effectiveness. So if you are lending, you have to lend responsibly, and so forth and so forth. I don't have to remind everybody around the table about these things. But in policy specifically, for sure, if you are going to borrow, you need to think about debt sustainability. And that means the other side of the coin is that the lender should also ensure responsible lending. Recently, there's been a lot of discussion around, how big are African economies, and talk about estimating the true value of wealth on the continent. And natural capital accounting has become a hot topic. I know some colleagues are working on how do we develop a different set of national accounts that take into consideration natural capital. And as a result, the ability to the continent to pay its debt then would be significantly increased if the current method of GDP is found to be presenting a large favorable picture for the continent. Issues around transparency and disclosure. Many entities are now saying there is need to work on transparency norms for resource-backed loans, including disclosure, making sure that any contract of the loan is made public, including extractive and trading rights. As I said, resource-backed loans can be used beyond infrastructure, including using countercyclical loans And that should be able to widen the fiscal space for countries. But in many instances, it doesn't, because the issue of disclosure, there are maybe too many parties contracting things, and nobody really seems to know exactly. So the issue of making sure that we understand what we are contracting remain actually important. Now, the loans themselves may not be cheap, and so the need to invest strategically and productively is actually quite critical. And so, again, you need a good team of project managers, you need a good team of people who understand public financial management, a good team of economists to advise government to be able to get the best deal out of these engagements. I've already alluded to this as well, the issue of loans being procured outside of official procurement processes. It would be very important to bring loans on an integrated budget so that the Ministry of Finance can report on it. It's part and parcel of general budgeting in the country. The capacity to negotiate, already also I alluded to that. And granting extraction right to subsoil wealth may actually make for poor collateral due to valuation problems. And as I mentioned at the very beginning, half the time we do not have quite accurate geological maps for us to have a very good sense of what actually is being mortgaged. And so the issues of transfer of intergenerational wealth and all of that becomes an issue and become legally also probably contested. And so it's important that we think about this. I think it's an instrument that can be used strategically, and if used correctly, it can provide developing countries, particularly African countries, with good sources of development finance. So let me stop there, and we can have a conversation. And I would love to hear the views of colleagues who sleep and breathe finance in theory and probably also in practice. You may have experiences elsewhere where these have done wonders, but the results for now is mixed. Part of it because, as I said, we don't really know how many billions have been secured by our countries in the name of resource-backed loans. The different estimates. And of course, when corporations are involved, then you have issues around illicit financial flows on the other side. So there is a lot of complexities that need to be resolved if we are supposed to optimize the use of this instrument. Thank you.
Yeah. And George, thank you very much. And whatever you mentioned actually is very insightful, I should say. As a policymaker, you pointed out some issues that for everybody who is here to think more deeper about, research, how to, and this is a very good point that we can connect our research with policy making. So a lot of issues that are involved, and the topic itself is very, very relevant. I mean, you mentioned us. We have been doing things, regarding China, in Africa, and also natural resources-based loan payment. So let me kick off the question. I'm sure my colleagues will have a lot of questions. Oh, I thought, Yusuf, do you mind you wait after I kick off one question and then you come in? And George, by the way, it's very insightful. Normally, I do not hear from you about intellectual things because you always tell me a lot of jokes. When we meet, it's all about jokes and not the intellectual. So it's a very, very insightful. For me, George, the first question I would ask you is, why is this new? We have seen this in terms of the Chinese model in Africa for many years. So why are you saying this is a new model, even though we have already been, I mean, you have, I mean, African countries, some countries have been using this for maybe in the past 2 decades.
Yeah.
So what are the, new things that we should, are you saying this model is worthwhile after seeing so many cases in Africa? Or are you saying there are some problems that we should really work on those problems based on what we observed? I saw another hand already. Yes, I can see that. So George, can you please respond?
Yeah. So what I'm saying is that I actually said, I read somewhere that resource-backed loans are not necessarily new things. I even made a reference to the American South, where slaves were being used as collateral to mortgage resources for banks for financing the agricultural sector. So now, the point is that for the continent, we are in a space where traditional sources of development finance have shrunk. The experience that you just quoted, Prof, is that yes, we know what the Chinese have done and continue to do, but my take is that we actually can improve this instrument, and that's why I was imploring everybody who is working on this on a daily basis, Yusuf and others. How do we actually make sure that this instrument is actually optimized? And that's why I kept referring to issues around negotiators' capacity to get the maturity conditions for these loans right. The issues around transparency and governance, issues around public financial management that are linked. So the complexity around the instrument is what probably need to be resolved, and the brain around this table probably would play a critical role and help countries you know that a lot of resources are coming on stream, and there's a lot of talk about rare earth elements and so forth and so forth. But how are we going to optimize this if we are going to use these so-called resources to borrow and to finance our development in the context of shrinking ODA and all this geopolitics and so forth and so forth? So that's my take. It's not totally new. For sure, the Chinese have been with us for the last. That's why I was giving you the example of Angola in the 1990s. So it's not a new instrument, but it seems that an instrument that has not been optimized. That's what I'm trying to say.
Yeah.
All right.
So let's so this is a good start. So let's go down to the hands here. So the first in the queue is Yusuf. Actually, Yusuf, you were named by George. So please, yeah. Yusuf.
I think it's muted.
Yusuf, I cannot hear you, please. Yeah.
Sorry. Okay. Now you can hear me, right?
Yeah.
Yeah. Thank you very much, Ong. I mean, yeah, actually. And George, it's nice to see you. I mean, even if it is virtually, right? And then yeah, nice to see you, right? Even virtually.
Yeah. I can hear you. Yeah. Thanks.
Okay, good. Yeah. Okay, right. And thank you very much for this very interesting and insightful, actually, I mean, presentation. But tell me, I mean, this resource-based, I mean, actual loans we contract. I mean, are they repriced based on the evolution of the resources prices, or when the prices are decided at the beginning, then they are not adjusted anymore?
No, the tendency is that these things are not renegotiated. The lenders always resist when things are moving in their favor. They resist. And I think the example of was it Zambia or was it Botswana where they had to renegotiate the mining contract arrangements. I think it was in Zambia over copper with the Chinese, but those conversations didn't go down very nicely. It was protracted. It took a very long time. And that's why I'm saying that it might be better to get this thing right at the beginning. I don't know whether you can actually index this thing so that when prices go up, we don't have to give you more. When prices come down, maybe we'll give you more. So the issues of indexing in the contracts might be one that you guys with the big brains on finance could could help countries think out. So that's the kind of response I can give you, Yusuf.
Okay, right. Because I'm wondering, how much the bargaining power is playing into this actually, right? Because you can see many of them, I have seen, cases of some countries recently. Sometimes, really, when they comes and negotiate, actually, it's not like they have the bargaining power. The bargaining power seems to be on the side of the lenders. Most of these times. Probably, one way also for African countries is that if they can get together at some point of time, some of the countries can get together, actually negotiate those or the terms of those loans. Maybe that can also, help actually, right? Beside, the pricing issue.
True.
Yeah.
No, I agree. I was at the G20 summit recently, and there was even talk of forming a continent-wide wealth fund.
Mm-hmm.
But that means then if we are going to use this from resource income, then we are negotiating as a group. And so that would fit quite neatly with what you are suggesting. But for sure, if you come individually, chances are that you will not get a good term. But part of it is also we don't probably have very good negotiators that go to these conversations. And that's why Yusuf, next time they should bring you on the team and you can help them structure this instrument much better.
Okay. Okay, thank you.
Yeah. So you have another job in the lab. Yeah. So thank you, Joseph, and thanks, George. And I see Martin's hand next. Martin, thank you.
Yeah, thank you. And thank you very much, George, for that presentation. Could I ask you two questions? Firstly, do we have any empirical evidence to indicate by how much the interest rates on sovereign loans are reduced through the use of collateral as resources compared to a normal sovereign loan, which is not collateralized in that manner? And secondly, if the borrower defaults on a resource-backed loan, how in practice does the lender actually enforce its rights to the collateral?
Okay. So on the first one, I think that's probably the work of all of you around the table, because part of it is that we also don't. The whole thing is rooted in large chunk in mystery. That's why I was saying the issue of transparency, including the different interest rate spread that is associated with these loans. We don't get to see them clearly, and that makes it also very difficult to monitor. It makes it difficult to track. It makes it difficult. So we don't know how much is being lost. I've seen, there was a number I saw, something like 100 billion or something like that being lost by the continent annually around these kind of activities. Now, the second question, which maybe you can repeat it, but maybe I didn't get it quite right. The second question was, Martin.
Okay,
Martin?
right. Yeah, if the borrower defaults.
Oh, yeah. So if the borrower default, what is the recourse? And I think I was using the example of Zambia recently, where the China was being made to renegotiate over the copper belt contract, and it was very protracted. But as Yusuf I indicated, most times actually the lenders are in a more privileged position than the borrower, and so at least the example from the continent, we have tended to succumb to the lenders more than anything else. So I don't know of any country, at least on the continent, that has defaulted or gotten away with a better deal after threat of default. Even though if as a group, I think if we were to do that, maybe we'll get better terms and better flexibilities from the lenders. But I think if you are also suggesting, like Yusuf was, that we could get a better deal if we were, doing this as a group, I agree. I think we would get a better deal.
Okay, George, you mentioned Chad, I think, in your presentation. Did that country default on a resource-backed loan?
Is there the Chad example? Yeah, actually, yeah. But they were made to pay eventually, actually, you see.
And who was the lender?
I think it was Chinese Import-Export Bank.
Thank you, George.
Yeah. And thank you. So you see, you have a lot of cases already. But George, you are thinking about setting up a project. You do need the evidence, and we can do the evidence for you. And so China has been doing this for many years. Well, I will talk to you later, but think about us. And we have a hand. Ruga? Am I pronouncing your name correctly? Sorry about that. So
no, that's okay. It's Ruga. It's Ruga.
Ruga, okay. Welcome. Okay, thank you. It's your turn.
Great. Good afternoon, and thank you for today's presentation. If the moderator will allow, I've got 3 questions.
Yes, 3 questions are good. Good, yeah.
All right, and the first one touches on something that was raised towards the end of the presentation. If we're thinking of the data gaps that are related to geologically mapping some of Africa's proven mineral reserves, how much of a problem is that issue of data gaps when then we get to loan term negotiation? That's the first question. And then second question is, within G20 Common Framework discussions, what's the view towards resource-backed loans? And then the last question is there an official position from AFDB towards resource-backed loans? In other words, are you encouraging, or are you supporting member states to take them on, or are you maybe on the sidelines?
I can start with the last one. I don't know the position of the current president. He has just been in for a couple of months, but I can tell you that Adesina was against resource-backed loans. He thought it does not give countries any disadvantage for the reasons of all the complexities and the data gap issues and the issues of governance and lack of transparency and so forth and so forth. So it's if we resolve the data problem, for example, and that's where Prof was saying we can work on that and try to figure out, what are the numbers exactly, and because those numbers will then inform what you negotiate. If you don't have you don't have the evidence, you're not going to be able to make the correct policy decision. So so the work on the numbers for sure it's probably urgent. It should have been done like yesterday, and that's why I was saying that the work on national accounting using natural capital and so forth, and redefining what is really the true wealth of. Should we now abandon the GDP formula and use natural capital as another mechanism? These are conversations that need to be resolved, and the system of national accounts being updated and all of that. I think these are really critical part of the work that need to be done, so to speak.
Well, that's very, very interesting. So you confirmed that it is evidence that we need to really improve this model and to find out so for example, the valuation is so crucial in this model. If you do not know, African countries, if you guys do not know how much you have in terms of natural resources as the collateral, then how can you sign this contract? So, and in addition, there is another thing, and that is the commodity market. You mentioned the market volatility. So the market is moving, price is changing. How can we sign the contract that can contain, that can reflect this market volatility? And I understand that this has been the historical problem, even though when African countries are exporting, or even though when they signed some contract with the Chinese infrastructure project. So I think it's so interesting model, and I can see the loopholes, and I can also see the advantages. And George, you mentioned the capacity of building, a capacity of negotiation. But who are those people? People have been talking about that agency. Who are that body of the representative who can talk with Chinese lenders on behalf of Africans' benefit? So if they know a lot of evidence, they know they have a lot of cases, evidence in their mind, they probably will find themselves in a stronger position in negotiating. So that's my extension a little bit, but I have two other questions, George, and then I ask for another round of hands. So you motivated this project or this proposal by saying, look, it is because African economies or governments, they have difficulties in getting access to capital market. And then you say, okay, if we have some problems that private investors are not going to lend to us, we can use our own thing, and that is natural resources. So my first question is whether or not this resource-based loan financing model is sustainable forever, even without domestic development of domestic capital markets. So what about your own domestic capital market development? Do you think this resource-based financing loan model can solve the long-term problem for African development? And so that's my first question. And maybe you can answer my first question. Do you mind?
Yeah, sure. So right now there's even an internal conversation happening in the bank, in ADB, about what we call the new African financial architecture. How do you actually bring together the different stock exchanges, the different sovereign wealth funds, the different pension funds, the insurance companies, and all of that? How do we actually leverage them together? And maybe we provide risk guarantees so that they can invest, because many of these entities are investing outside of the continent. How do we actually give them comfort so that they can actually invest internally? And so that goes to the second part of your question: is resource-backed loan sustainable forever? Some of these resources are depletable resources, right? So you can't use them forever. So again, issues around sustainability, you need to think about it. And that's why I was talking about investment efficiency. If you don't invest efficiently, you will run out of steam eventually, so to speak. And so both of those, I think you need action on both fronts: deepening financial markets internally to give Africa financial sovereignty, so to speak, but also making sure that we have quality projects and investment efficiency across the continent. So quality of projects at entry need to be strengthened and all of that. But alongside, of course, the issue of agency. Who are the people who we should be talking to? Who should we give the numbers to? We do have elected representatives in parliament and so forth. Those entities need to be made stronger. The office of the Auditor General need to be stronger. The office of the Anti-Corruption Commission need to be stronger. So there's a multiple prongs approaches to trying to get this off the ground. But it's not, you can't achieve this with just one entry level. There are multiple layers of action that need to be taken.
So you agree that this resource-based loan, although has been used for a long time, particularly for resource-rich African countries, but you need something additional to that. You really need to focus on development of the financial system and domestic market.
Yeah.
So my second question is actually related to this access to capital market, to international capital market, let's say. So I saw an article from FT actually 2 days ago. And the title is, I think I had this title here, Africa needs its own credit rating agency. Do you know that there is a debate about the credit rating? So African governments, or I do not know, maybe including yourself, you guys are arguing, I do not trust international credit rating agency in terms of, because, people look at the score, credit rating score, so that they decide whether or not they invest in African countries. So, but the problem is African people or scholars from Africa, they argue there is a so-called Africa premier. So it's like a discrimination thing, against. So you have the judgment that the yield should be higher than other countries. So what do you think about that? So I was thinking about that. I thought, okay, it is nice that you have your own credit rating agency. So then you know yourself well, so you can rate yourself well. But who is going to? It's a kind of a trust, right? So who is going to trust your own credit rating? And rather than the three credit rating agencies, Standard & Poor's, Moody's, Fitch, for example. So do you know this debate? So what do you think about this debate?
Well, I think the AU has actually set up a credit rating agency, or at least it's in the making. Huh?
In the making, yes.
Yeah. So they have set it up. I think it should be up and running anytime soon, actually. Yeah.
Okay. So the idea is that you are running your own credit rating agency, and then you do your own things, and then people compare. People look at other agencies, and then they compare, and so that they decide whether or not they invest.
Yeah. So they are producing an independent rating to countries, to the members of the African Union. Yeah.
Yeah. Okay, that's good. But do you think the existing credit rating agencies works adversely against Africa?
Yeah, the risk perception is very high. Yeah, I did mention it in my conversation. Yeah.
Okay, great. Okay, so do we have any other questions from the floor? Andrew, I see. Yeah, Andrew, please.
Yeah, thank you, George, for this presentation. I think it's very useful for countries with high natural resources and low capital to look at. Even as people say, it has been there, but it can also always be improved. Yeah, my question is in a way different, because I'm trying to point out that one way of mitigating any problems with this type of financing is to take the approach of the PPP, public-private partnerships, where the lenders also have an interest in the project which is being developed. Since you mentioned the infrastructure projects like highways, Cape to Cairo, expressway and so forth, including power supply companies who generate power. If the lenders could have an interest in the project being financed, I think you can have a hybrid solution where the resources are targeted as collateral, but also the project being implemented also becomes collateral in itself. So I was just thinking whether it's something that you have thought about in terms of broadening the instruments. Thanks.
Yeah, I think we can broaden the instrument. I think it can be broadened, and that's why I was saying that we need to think about this carefully, because clearly it's complex. But yeah, and it doesn't have to just be on resources. It could be used for other financing needs, so to speak.
Okay, so great. Any more questions? Okay, so yeah, I think George. Oh, Jeffrey, please. Yeah, Jeffrey.
Yeah, thank you, Hank, and thank you, George, for your presentation. I just wanted to say a quick thing about the project that have been invested in Africa. So, what do you think of the diversification? Because we talk about infrastructure. If we only invest in roads and other major projects without production, manufacturing, so how do we really lift Africa out of that primary sector into production? Because you made mention of Chinese. Chinese went back to tradition. They produced, they manufactured things to the entire world. So what do you think of that diversification? The projects that have been invested in, are these projects going to move Africa to the next level? Thank you.
Yeah, so I did actually mention earlier on and said that part of the problem is to build resilience on the continent, right? And building resilience means also greater value addition and diversification and on and so forth. So structural transformation for sure is key. And I also said that the instrument doesn't necessarily have to be on infrastructure per se. It could be used for other financing needs, so to speak. We just have to negotiate the terms correctly and ensure there's investment efficiency, so to speak. So I did kind of allude to those issues that you are raising.
Mm-hmm. Yeah, you did mention briefly, yeah. And so I think maybe that is related to the processing value added in this natural resources sector. And we have been talking about that for some time already. But still, as you say, I think, yes, you mentioned this type of loans, maybe previously they were used in relation to infrastructure, but now it can be used to something else, and that something else can be processing, industry-related manufacturing, and things like that.
Yeah.
Okay, great. Do we have more questions here? I really like this type of interactive discussions because I think people will, and that extended people's mind to, to catch up connections. So that's, and if there is no more hand from the audience, George, I think I can take home a few things today. So it's worthwhile talking to you always, So, yeah, so it's a good topic. So we have been doing the research in related to the resources, connected the infrastructure, financing and things, but there are some debates as well, like how do you solve the debt problem? And we are continuing to debate and to follow the literature in this direction. And thanks, George, for some new directions or new insights. Okay, George.
Thank you.
Before I close it, so 1 minute. 1 minute for you, George. Or maybe half
thank
minute.
you, everybody. I think that it's let's particularly the data issues, the evidence stuff. Maybe there's a lot of work that you guys can do on that, and then we will all be made the better out of it. So thank you very much.
Great. Thank you very much, George, and you spared your time with us, and very nice topic, interesting, important topic as well. And thanks everybody for participating in the discussion. And we did have quite a few good questions. Yeah, have a good rest of the day, and then I'll see you next week.